Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing with a special report on the economic impact that the COVID-19 coronavirus is having on the electrical market. In today's presentation, we will explore the latest weekly economic indicators through the second week of May that you can use to get a sense of where the electrical economy is heading in the coming weeks and months. One of the many challenges that electrical distributors, manufacturers, and reps are facing during this crisis is finding timely economic data that can offer an early indicator of where the market may be headed. Local employment data for your electrical contractor or industrial customers, the value of new construction, housing metrics, and other economic information often lags the market by at least 4 to 6 weeks. The editors of Electrical Wholesaling and Electrical Marketing believe we have found a solution. Over the next 10 to 15 minutes, I'll discuss the latest data from some key weekly economic indicators that you can watch to take the pulse of the market. We'll be providing these updates every 2 weeks. These 5 weekly indicators are initial unemployment claims at the state level, rail freight car traffic, the Baker-Hughes Rig Count, oil prices, and copper prices. This week, I'll also be offering some insight into the latest construction project data and a sneak preview of what top 200 electrical distributors see in the economy right now and when they think things may start to get back to their new normal. Now let's take a look at the data. This unemployment data from the U.S. Department of Labor and the U.S. Bureau of Labor Statistics highlights the states with the most unemployment claims so far in the COVID-19 coronavirus crisis. This data is valuable to electrical distributors, manufacturers, and reps because it offers empirical evidence of just how big an issue layoffs are now at the local level. On a more positive note, when these claims start declining and establish a new trend in this direction, it'll be a clue for you about when the economy in your state is starting to improve. For the week ending May 9th, Connecticut led the nation with 298,680 claims, followed by Georgia with 241,387 claims, and Florida with 221,905 claims. The other states in the top 10 for unemployment claims are California, New York, Texas, Washington, Pennsylvania, Illinois, and Kentucky. The news on the unemployment front hasn't gotten any better since our last presentation. However, more data has come out that offers some specifics on the crisis that allows us to understand which industries are suffering the most. Of the 22.5 million unemployment claims submitted in April, the leisure and hospitality industry segments, which include restaurants of all sorts, hotels, and other foods and entertainment jobs, accounting for a whopping 22% of all unemployment claims. Within that category, the food services and drinking places segment was hit the worst, with over 3 million claims. It's not surprising that the retail trade also got hammered with approximately 2.9 million claims. Closer to the electrical industry, the manufacturing and construction industries were also hit hard, as we all know all too well in this business. Construction and manufacturing account for at least 75% of all electrical product sales, so our industry is definitely feeling their economic pain. The most recent data shows that 1.53 million claims were submitted by contractors, and that your industrial customers saw 2 million unemployment claims. One of the more interesting leading economic indicators for the overall U.S. economy is freight rail traffic because it's a measure of the amount of raw materials and finished goods that are being shipped by rail. The best source for this data is the American Association of Railroads. They publish this data weekly. The news hasn't gotten any better yet on the rail freight traffic front, as all of the major categories continue to slide. According to the American Association of Railroads, total carloads for the week ending May 9th were 185,144 carloads, which is down 28.4% compared with the same week in 2019. None of the 10 carload commodity groups posted an increase compared with the same week in 2019. Commodity groups that posted decreases compared with last year included coal, down 42.3% to 46,515 carloads, motor vehicles and parts, down 87% to 2,108 carloads, metallic ores and metals, down 35.5% to 13,624 carloads, and petroleum and petroleum products, down 26.95% to 9,500 carloads approximately. This data comes from the AAR Senior Vice President John Gray. This slide provides more detail on both a year-over-year and year-to-date basis for the key freight categories. Total carloads are the various types of freight, intermodal units are the containers being shipped by rail, and total traffic is the combination of total carloads and total intermodal units. If you track the oil market at all, you're probably familiar with the Baker-Hughes Rig Count, which tracks the oil and gas rigs that are operating. The data is available by state, basin, and nationally. The rig count has declined further and faster since our last presentation. The number of total oil rigs operating is down 59%, with 485 fewer rigs operating through May 8th of this year than there were in early May of 2019. As we have mentioned in past presentations, it's interesting to note how the consolidated oil production is in the United States. The Permian Basin in West Texas and eastern New Mexico and the Eagle Ford Basin in Texas account for 70% of all operating rigs in the United States. There's roughly 10% in the Williston Basin in North Dakota, and that's about 80% in just 3 basins. When you look at this chart, you can see why the drop of 259 rigs the Permian Basin has experienced so far this year has had such a big impact on the overall numbers. The natural gas market has declined slightly since our last presentation, dropping another 5 rigs. The bulk of operational gas rigs are in the Haynesville Shale Play in southwestern Arkansas, northwest Louisiana, and in East Texas, and the Marcellus Shale Play in Pennsylvania, eastern Ohio, and West Virginia. This slide gives you an idea of the largest oil and gas deposit. It really gives you a sense of just how many of the large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers. Most oil folks say they like to see the price for West Texas Intermediate around $60 a barrel, which is where it started the year. And that's the range where everybody reportedly makes money. While oil prices have improved over the past 2 weeks since their historic drop in April, it's still a pretty bad scene in the oil industry. To provide some historical perspective, and as we mentioned in the last presentations, oil prices lived in the $70 to $100 plus range from 2007 to 2008. The break-even point per barrel oil varies by basin. Company operates much more efficiently than ever before and have driven those prices down quite a bit. A 2018 post on oilprice.com said the Eagle Ford breaks even at around $48 to $61 a barrel. The Bakken area breaking even at $53 to $56 a barrel. The Niobrara at $63 a barrel. And the Midland Permian Basin breaking even about $37 a barrel. I haven't read anything saying that the crisis in the oil and gas industry will end anytime soon, or that it will subside as the U.S. gets a better handle on the COVID-19 coronavirus and the U.S. economy starts to begin to open up. This slide focuses on the year-to-date change for West Texas Intermediate oil since the beginning of the year. As you can see, it started around $50 a barrel in early and then kept that level through early February, dropping significantly through March. And we've experienced that slight rebound over the last couple of weeks. Economists like to call copper pricing Dr. Copper because it's a leading indicator for future economic activity since copper is used in so many industries. But the construction industry is among the leading markets because of its use in wire and cable and copper plumbing pipe. No surprise that the news isn't great from the copper market, with prices down 17% year to date and 13% over the past month. But over the past 2 weeks, prices are currently stabilized in the $2.30 range. It's interesting to note that they took their biggest dip this year on March 18th, declined 16 cents from the day before. That's right when many of the shelter-at-home policies were starting to kick in around the country. As you can see in the chart, the current range is still down quite a bit from where prices started out in January, when they spent most of the month above the $2.50 per pound range. Now let's take a look at the construction market. We recently updated our database of construction projects for electrical marketing and found that despite the work stoppages due to the COVID-19 coronavirus, there were some interesting construction projects in the news. As you can see in this slide, airport construction continues to be an active category of infrastructure work. Work on the $950 million Portland International Airport started in April, and a smaller project at Long Beach Airport in California is also underway. And when it does start, the expansion of San Diego International Airport will be huge. A post on airporttechnology.com said this project will be worth $3 billion when it gets going. I also highlighted in yellow a gigantic global project in the renewables area that shows that some of the coming potential offshore wind projects that will be soon developing along the U.S. eastern seaboard. This project in England, the Dogger Bank offshore wind farm, will be the world's largest and will require $11 billion in onshore infrastructure investment, including the necessary cabling to connect it to the grid, and a large operations and maintenance center in Port of Tyne, where they will stage the project. The Dogger Bank wind farm, which will be built about 80 miles off Britain's coast, will require hundreds of miles of subsea cable and many more miles of cable onshore. I bring this project to your attention because over the next few years, you'll be hearing more about the start of some very large wind farms along the East Coast, offshore from New England, off New York, New Jersey, down offshore Maryland, and Virginia as well. While much of the work will be done by international specialists in offshore wind construction, the onshore maintenance and operations facilities and utility connections to the grid look like they'll be done by local contractors. That's good news for your customers in those areas. Our research into current construction projects also revealed that more than $3.2 billion in the construction of hospitals, medical buildings, and medical education facilities are either underway or on the drawing boards. One of the larger projects that recently broke ground is the $800 million New Valley Hospital project in Paramus, New Jersey. That job will have a huge impact in northern New Jersey and will replace the existing Valley Hospital in Ridgewood, New Jersey, just a few short miles from where I grew up in Waldeck, New Jersey. Now let's take a look at another key market indicator that electrical wholesaling setters find useful, the consensus construction forecast published by the American Institute of Architects. We included this forecast in our previous podcast, but we got some good feedback on it and just wanted to make sure to include it again here in case you didn't see it in our last one. AIA's consensus construction forecast utilizes data from leading construction economists from 8 firms: Dodge Data Analytics, IHS Economics, Moody's Economy.com, FMI, Construct Connect, Associated Builders and Contractors, Wells Fargo Securities, and Markstein Advisors. They initially expected modest slow growth for non-residential building in 2020, but now they see big declines because of the COVID-19 crisis. According to their forecast, the small projected growth for 2020 has been revised down to an 11% decline, with the sharpest decline predicted to occur in the commercial construction sector. While the slight 0.6 growth was originally forecast for 2020, it has now been revised down to a loss of 14%. Institutional construction spending will also be hit hard, although not quite as seriously as commercial, with losses of 7% now projected versus 2.9% that we predicted back in December. I also thought you might like to hear what some of our top 200 electrical distributors thought on the economy. We got some good information back from more than 100 top distributors on when they thought their local markets might return to some sort of normal. I thought the results were pretty optimistic. More than 60% expect better market conditions to return in either 3Q 2020 or 4Q 2020. Over the years, we've found electrical distributors to be very solid forecasters from their surveys and the market planning guide. That ends our report for today. If you're looking for more local economic information, check out electricalmarketing.com. An annual subscription to electrical marketing includes electrical sales estimates at the metro, county, and sales level, electric product estimates for 17 product categories at the state level, and access to a construction database with hundreds of projects that is updated quarterly, as well as building permits at the metro and state level and other key economic data. An annual subscription to electrical marketing only costs $99 per year at our special promotional rate. The subscriptions include access to all the market data described in the previous slide, as well as electrical marketing newsletter published twice each month. You can get that either mail or digital in a downloadable PDF format. Some of the data that you'll get in the electrical marketing newsletter includes the electrical price index, which many subscribers tell us is worth the cost of a subscription alone. If you're interested in subscribing to electrical marketing, contact Sonia Trent. You'll see her email on the screen here. Thanks for listening to our presentation on the 5 weekly economic indicators to track. And please give us some feedback if there are other indicators that you would like to be including in future broadcasts of these indicators. Thanks, and have a great day.